Now, China's economy seems to be picking up steam, according to the most recent manufacturing numbers. The Government Purchasing Managers Index grew in October. That happened for the first time in 6 months. The service sector also expanded, a sign that Beijing's latest stimulus measures are working. The other manufacturing survey, published by the Caixin, also went up thanks to increased output and stronger demand. It is a somewhat dramatic turnaround after several sluggish months of growth, manufacturing activity caused by falling producer prices and sluggish growth in orders. Now, Beijing is also considering issuing a whopping $1.4 trillion in extra debt in the next few years in an effort to boost the nation's economy. Okay, let's take a look at these numbers and where China is going. And for that, we turn to Yan Liang. She is chair professor in economics at Willamette University in Portland. Welcome back. It's good to see you again.
Good to see you, Sean.
Okay, both official information as well as the private Caixin survey shows that manufacturing activity expanded in October. It's good news and widely believed to be a strong sign that the significant stimulus measures that have been imposed or implemented by Beijing are kicking in. Your thoughts on that?
Right, I think you're right. When you look at the manufacturing PMI, based on the official data, it expanded to 50.1, up from 49.8 back in September. And this is the first time that this index is in the expansionary zone since April this year. And this is also quite remarkable when you compare, October, the number is higher than September, because we know October, we lose a full working week. So in terms of the manufacturing activity, this is really strong. And I think, as you mentioned, the non-manufacturing PMI is also in the expansionary zone at 50.2. So that just indicates that, the business sentiment, the activities are picking up. And I think that's an early indication that the stimulus packages that have been rolled out since late September are taking effect.
Okay, you and I have talked about this next topic before, and this is a year of change for China. The government stressing greater innovation, greater quality, higher quality in its manufacturing. So there really is more to this story of manufacturing. Kind of explain to international viewers what you have seen unfold in the past 6 or so months.
Right. So when we look at the first 3 quarters data, we're seeing that industrial output has been, growing at a healthy pace. But when you look at the high-tech manufacturing production and also high-tech manufacturing investment, they grew double, basically at the rate double the general growth in manufacturing. So both investments and also high-tech manufacturing, they both grew at about 10% in the first 3 quarters. So you're right. So we're not just seeing the industrial output expansion, but we're really seeing that high-tech sector, high-tech manufacturing, high-tech investment, and also high-tech services. All these sectors are growing much faster than the average speed of the economy.
And the obvious goal is to put China on firm footing for the future. And when we talk about that, we have to talk about home sales because people saw the first rise this year. Now talk about that, because home sales, the whole future of will people be able to buy a house? Are they worried about where the value of the house is going? That has been a drag on China's economy for some time. But this latest information, is this an indication that the country may have turned the corner?
Yes, I think so. I think, again, we know that the housing sector needs to be stabilized. So it is a very deliberate policy choice that we wanted to, in a way, prick the bubble, right, so to speak, and try to make the real estate sector more sustainable and more productive. But at the same time, the housing market is a very important place where households park their wealth. So when the housing market is in a slum, this is not conducive for consumer spending. And that's why we see a slew of policies trying to stabilize the housing market, right? Trying to finish the unfinished housing projects and also trying to get rid of some of the inventory. So I think, again, the early data has indicated that in October, the new home sales have gone up by 0.9% year on year, and it has actually gone up 6.7% month over month compared to September. Now, this is very significant because usually September is the so-called golden September for the housing market. This is usually the month where we see the largest home sales. And yet, because of the late September, we started with all these housing stimulus policies, we see October home sales really took off. And for the first-tier cities, we actually see new home transactions gone up by over 14%. So I think those are, again, early indications that some of these policies are really working quite effectively.
Yeah, and to pick up on what you're talking about, the consumer spending is so important because China is counting on internal consumption going up. So talk about the stimulus measures and the risk reward that has really unfolded.
Right. So we know, consumption is a lagging factor, meaning that, as long as income growth, as long as, households' wealth growth, then confidence is there, then they will go out and spend more. And so it's very difficult sometimes to directly stimulate consumption. And that's why I think the slew of policies that try to, boost the equity market and boost the home sales, home buying market, all these in some ways will indirectly provide more stimulus. On the other hand, I think there's also some municipalities, some of the city governments, they are giving out consumption coupons. For example, Shanghai, 500 million yuan worth of consumer coupons.
Right.
So all those are helpful. So when we look at the numbers, again, home appliances sales and also auto sales have took up pretty well in October as well. So that indicates consumer confidence is gradually restoring.
We don't have a lot of time, but the Standing Committee of the National People's Congress is going to meet next week. Talk about what you expect in terms of a fiscal stimulus.
Right. So we're all expecting pretty large numbers of fiscal bond issuance quotas for both the central government and local governments. And think now the numbers that people have been estimating is about 10 trillion yuan, which is about $14 billion. Right. Some of them would be the central government, some would be the local government, and I think the government will stay very flexible and vigilant depending on the U.S. election outcome. That number could also get bigger. There's also some talks about 1 trillion yuan issuance bonds for consumption stimulus and another 1 trillion for bank capital injections. So in total, I think we're looking at around 12 trillion yuan worth of bond issuance, but some of them would be over a few years. So that remains to be seen.
Yan Liang, we can't thank you enough, and I think you're quite the trooper. It sounds like you're kind of battling a cold, and for that, we thank you for your time.
Well, thank you so much, Sean. That's very kind of you.
Okay, take care.